Thinking about renovating or building, here's how to finance your dream project without the stress. I'm Andrew Timms.
And I'm Paul Hixon from Loan Market. So Andrew, you've got your dream project. You want to build your dream home. There's three ways this could happen. It could be a land and construction, it could be a renovation, or it could be just a small reno to an existing property. Should we break those down?
Yeah, let's do it, Paul.
Should we kick it off with land and construction?
Yeah, so with land and construction, what will happen is the bank will need to do a valuation on the land, ascertain a value. Let's say that value of the land is 800,000. And then what will happen is you will then need to get a fixed price build contract. Included in that will be specs and plans that will have to come through. From there, the lender will then send their valuers in and value the property based on that contract. So let's say that the contract value is 600,000. Typically, they will attribute 600,000 value to that build. So that total project would come in at 1.4 million.
And so then the bank's going to lend against that $1.4 million, right? And unusual LVRs kick in 80%, 90% if you're an LMI waiver or within the normal realms of lending.
Correct.
Great. So then let's move on to, say, a renovation. So there's going to be a reno of an existing property. We've got a nice Queenslander up here in sunny Queensland, and we want to reno that property. Let's say it's worth 1.4, and we're going to do $1 million worth of renovations. How are we going to do that?
Okay, so same scenario in terms of you would need a fixed price build contract, specs and plans to come through. Typically, they would come through with stage payments. Now, most banks will range and accept anywhere from 5 stages to 8 stages. And then what will happen from that is each stage that gets paid, the bank will do a valuation the first stage. And then from there, they will just let it run. As long as the invoice comes through, they will ensure that the owner's up to date and that it's been completed on time. Then each of those payments is important to note, will be interest only as well through a construction phase. So interest only payments until the project is finished. And then if it's an owner occupied project, it will flip back to principal and interest.
So really, in summarising that, the property is worth $1.4 million. You want to do $1 million worth of reno. Typically, the bank's going to value the property, and we're going to get $2.4 million worth of valuation, and you can lend against that 2.4. The builder's going to have stage payments in his contract, and we're going to pay the builder as he completes the stage.
Correct.
There are other variations on that fixed price contract. There can be cost plus, but that makes it very difficult, and that is really speak to a broker about those ones before you get into signing that contract.
And the third type of construction or renovation is what we classify as small renovation. Paul, do you want to explain?
Yeah, sure. So a small renovation might be just a kitchen or a bathroom or maybe a combination of those, but it's not structural. They're not actually altering the building, we're not removing walls or removing posts or anything that might require council approval. And in those smaller non-structural renovations, we can just do a cash out. Some lenders are restricted to 100,000 as a cash out, some can go up to 250, some are unlimited, they can be always up to $1 million. But the bank is looking to make sure that the structure of the property is protected so that they have an asset value that they can lend against. So in summary, Andrew, we've got 3 scenarios. We've got a land plus a fixed price building contract to build a house. We've got an existing property and renovating that existing property. And those two really sort of work similarly. We'll fixed price contracts, paying builders to ensure that the job is done. The final option is using equity to do a cash out, to do some non-structural renovations of a kitchen or bathroom or something.
Yep. So Paul, a lot of this is actually driven by valuations. So our advice would be to get in contact with your broker, ensure that you get the correct valuation in place, and also look at your serviceability for this type of lending.